Craig Berry here with the Mortgage Reports podcast. Today we're discussing the need for innovative technological solutions in the mortgage space. We'll dip into the future of simplified consumer portals and the benefit that both consumers and lenders can get from this. Joining me today is Matthew Van Fossen. Matt is the CEO of Absolute Home Mortgage in Fairfield, New Jersey. Matt is also the CEO of Mortgage Automation Technologies, which is a financial technology provider that specializes in consumer mortgage technology, offering web-based point-of-sale solutions to some of the biggest mortgage companies in the industry. Matt Van Fossen, welcome to the show.
Thanks, Craig. Thank you for having me.
Absolutely. I'm excited.
That's a copyright infringement. You can't use the word absolutely without Absolute Home Mortgage's permission.
Well, that didn't take long. That's awesome. So, Matt, let's jump right into it. When did you get into the mortgage industry?
Yeah, great question. This year I'm celebrating my 20th year. My 20th anniversary was last month. I got in 2003.
Wow. And you haven't seen any changes.
No, it's been a pretty stable course, right? No peaks, no valleys, a nice stable 20-year journey. No multiple crashes or anything like that. Right.
And do you remember why or how it is that you got into the business?
Yeah. It's funny. We talk about mortgage origin stories a lot, right? Everybody's got their mortgage origin story. It's never, nobody ever stumbles across the mortgage industry. Somebody's always, drag them in. And, the foundation for me was technology. Me and my best friend in high school, we had a tech company and, we were fixing computers and we were, trying to do our entrepreneurial thing throughout high school. And we wound up running into a mortgage company one day in our tech journey and asked for an after-school job to learn the mortgage industry. And the owner of the mortgage brokerage was gracious enough to give me one. It wasn't a paying position, unfortunately. Apparently, I was learning the mortgage industry, how to make money. And, a couple of months later, I turned 18, got my solicitor's certificate, and was off to the races in this wonderful industry where we now have built a career out of.
So you've been doing this since you were 18.
Yes. Yeah. Right out of high school and always mixing kind of a little bit of technology in with mortgage processes.
Wow. Listen, I've been in it for 24 years and starting at the age of 18, I can't imagine. I mean, because this industry is so volatile and there's so much going on with it. It changes constantly, obviously, and we'll get into that in a little bit as well. But trying to originate loans and learn the business at 18, I don't know. I don't know if I would have been mature enough at that point.
Well, it was a difficult journey, right? A lot of my friends, they weren't focused on a career at that time. And the way I always saw it was, wow, if I put my time in now, I make an investment into this industry. I knew you could make good money in it. I knew that there was a lot of progression for success. I knew that, I saw it and I saw a lot of great professionals across the board, but I also saw a window of opportunity through the technology, aspect that I saw that the industry was antiquated in tech at the time. And, I thought I could make a change in it. I saw it as a business that was highly complex, a lot of regulatory red tape, if you will, a lot of rules, a lot of challenges, and, something that I was interested in taking on the challenge for at a young age.
Very cool. Well, I think that's a good segue. So let's talk about your resume a little bit. So you're the CEO of a successful mortgage company as well as a successful tech company, and you've figured out a way to bring the two together. You're named top mortgage professionals under 40 by National Mortgage Press. You've been featured in a number of publications like Scotsman's Guide and Housing Wire. The president of New Jersey Bankers Association, VP of board member of directors for the Community Home Lenders of America. And actually, tell me about that for a little bit, would you, Matt?
Yeah, sure. So, the Community Home Lenders Association, Community Home Lenders of America now, after the CMLA merger, is the leading advocacy arm for independent mortgage bankers in the mortgage industry. right? We specialize in just advocating for independent mortgage bankers, small to mid-sized mortgage banks. It's been an honor to work with my fellow board members and our constituents at CHLA. We do a lot of work of advocacy in Washington. We try to be the more smaller, nimbler group, in the industry that really goes and fights for mid-sized mortgage banks. As an owner of a mid-sized mortgage bank, I understand that we have private capital. We don't have the luxury of going and borrowing money from the government or from the Fed or going to the window per se. And with that, we need to make sure that our interests, considering that we're the number one provider of mortgages to communities and to low to moderate income borrowers, that we serve a major purpose in the industry, right? And making sure that the policymakers in Washington understand that when they're doing rulemakings, how that actually affects the street level, how that sometimes they do things with the best intention, but that could have adverse effects when it comes down to the American consumer and the American dream of home ownership. The most recent aspect of that, of policy and advocacy in action, has been what we did with LLPAs. We worked with other trade associations, but we were at the forefront of working with FHFA, working with the CFPB to understand that, some of these DTI-based LLPAs were going to, be really troublesome for consumers. And I think that we got a big win this year on that topic in particular when we got FHFA to reconsider the DTI-based LLPA.
Oh, no doubt. No doubt. I was really happy about that. Because when all of that first was rolled out, I mean, there was, as there was a whole lot of uproar in the industry. And then also it kind of had this trickle down effect of, from the consumer standpoint, of whether or not you were getting punished for having higher credit scores as opposed to lower credit scores. It just didn't seem to favor the appropriate parties sometimes.
Sure. Yeah, when you look at the mortgage industry as a whole, the past decade since we went through the financial market collapses of 2008 has been one that we've been resilient, but we've accomplished a lot of change. You go look at what happened with TRID, what happened with QM, what happened with the HMDA initiatives, and we've digested it and pretty much took it on the chin, and we've done a great job of redoing our technology, redoing our protocols internally at mortgage companies. And, when the DTI-based LLPAs came in, we kind of said, whoa, take a breath here. We got to look at this, particularly the DTI issue, not even the credit issue. The DTI issue was, the DTI fluctuates throughout that whole file, right? Depending on different factors. When the income comes in from the consumer, it gets calculated by the loan officer or processor one way. And then that income calculation may change based on factors throughout the process. And that's what we really try to relay to FHFA, that how would you feel if you were a consumer and your interest rate fluctuated or changed multiple times through change in circumstance throughout the loan? The consumer could be confused. They can consider it misleading. It's going to increase complaint rates. So, we really try to emphasize, let's look at the cross-pollination of regulation here. Let's see how these LLPAs would affect TRID compliance and your change in circumstances. And, luckily they listened and they said, okay, we're going to revisit this, another time. But that's a perfect example of why I do all three, why I focus on technology, running my mortgage company, and also advocacy in Washington for the industry, because all three create this perfect trifecta of being able to successfully manage these entities, right? Being in control of the source code of our technology that we use at Absolute and being able to share it across the industry is so important, because it creates a think tank outside of my own company. Also, now we have control of those user interfaces. We can adapt that technology to whatever's going on. And then, my work in Washington, my work through New Jersey MBA, this is about keeping my ear to the street when you think about it, figuring out what's going on to try to stay ahead of it. That benefits the technology company and the mortgage company. So, a lot of people say, wow, how do you do all three of these things, right? How do you do all of this and still find time for your personal life? I actually believe that it makes it easier, right? Taking up, 20, 30% of my time for advocacy, and knowing what's going on in the general industry, getting to work with my fellow peers, understanding the troubles that are going on in their business, making sure those troubles also exist inside of my business, and then utilizing the technology company to be able to provide solutions for that it creates a really nice ecosphere inside of my life to successfully manage kind of all these things together.
Very cool. Very well said. So, let's talk about the mortgage automation technologies for a minute.
Yeah.
So, in like, and I'll digress for a second. So, what are some of the challenges that are currently being faced by lenders?
Yeah. So, when we look at mortgage automation technologies and we look at lenders as a whole, we're seeing a progression of changes in not only our industry, but in consumer change as well. I like to look outside of our industry a little bit and say, okay, well, how are consumers evolving? How are consumers changing? And then how is that going to affect the mortgage lending industry? For example, you look at Uber, right? If I told you 20 years ago, hey, I'm going to order a stranger from the internet, get in the back of their car and drive you somewhere, you'd think it was crazy. Right? Say, no way could a consumer ever do that. That's against everything we've ever done. But self-service, the ability to put the power in their hands to order a car, right? And now we look at what that's done to the limo industry, what's that done to the taxi industry, right? It shows that consumers will evolve, consumers will adapt to new concepts. Same thing if we talked about Blockbuster and Netflix 20 years ago and those changes that would happen. So it proves that consumers change, and they particularly change in a way when it caters to their own self-service ability. And that's why at Mortgage Automation Technologies, we started looking at the point of sale sector. We were looking at a sector to enter the market that we can make the biggest impact. And when we looked at point of sale systems, we said, okay, well, where does a mortgage company's business come from? Comes from referral partners, comes from their loan officers, comes from their customers. Well, a point of sale system is the web-based user interface that interacts with all three of those parties. It winds up being the lifeblood of the mortgage company. And then we said, okay, well, wouldn't it be interesting if we can gear this company up to cater to the self-service industry, to cater to the fact that loan officers are no longer in the office. They're on the road generating business. That customers are looking for more information at their disposal and an easier way to apply. And then beyond that, going back to looking at other industries, even self-service terminals, we go look at the utilization of hardware-based kiosks at airports and in fast food. And we saw a big business opportunity. We said, wow, there's always been software companies in the mortgage and real estate industry, but nobody did what Apple did in the 80s, which was mix software and hardware together. So we, beyond designing the software in the point of sale system that improves the engagement of consumers, loan officers, and real estate agents and makes them more mobile, we also made a considerable investment in actually engineering proprietary computer hardware called kiosks. We call them loan pads. We have loan pads, and we have our kiosk series that actually allows loan officers and real estate agents to interact with customers in a whole entire different way. When they check in an open house and they check in on a loan pad, we capture that information. We start that communication and education process early with consumers. And then inside of our real estate offices, we put our sleeve behind kiosks there, and we train our real estate offices and real estate agents. If you have a customer, they walk in, they need a pre-approval, walk them up to a kiosk, have them do their 7-minute loan application. The loan officer's cell phone is going to get notified. And right from the power of the LO's phone, they can soft pull credit. They can generate pre-approvals. They can run AUS findings. They can even use automated tools like Candor and stuff like that to get a commitment and a pre-underwrite back within minutes of receiving the referral. Wow. It's really impactful, and it means so much more than just the software. And this goes back to industry advocacy, running the mortgage company. I spent a lot of time with our top producers, not only time at work, but time in our personal lives. And I learned something, Craig. Our professionals and our top producers in this industry, they're kind of stuck. They're stuck that, if it's Saturday afternoon and they're at their kid's baseball game and their top real estate agent calls them and says, hey, I need a pre-approval right now. They don't have a choice to say no. They don't have the choice to say, well, it's my time right now, because then they'll lose that account. Right. And in recognizing that impact on the lives of my own originators at Absolute, I realized that there needed to be a better way. There needed to be a way that when that call comes in, since they can't say no, well, instead of running to their car and fumbling with their laptop and spending 15 or 20 minutes to generate that pre-approval, I needed to devise a way that it could be 2 to 3 minutes from their cell phone. So we practice this concept of get back to life, right? Use our technology and get back to your life. Since you can't say no, well, if I can only interrupt your life for 2 or 3 minutes to service your account, it's a lot better than 15 to 20.
That's really, really cool. I have your website pulled up, and for the listeners, you really need to check it out at the mortgageautomationtechnologies.com. So, like, I'm looking at the loan pod, this
Okay, yeah,
$20,000.
Loan Pod's pretty cool.
That's really cool. So talk about that for a minute. Like, what would that experience be like? And then, so that when people go and look at that on your website, they'll understand exactly what that does.
Yeah, so LoanPod almost started as a joke, and then it got really serious. LoanPod's a combination of about 6 different pieces of our technology glued together, and we looked at the consumer experience inside a real estate office, and that when we go and do an MSA, we always have a built-in office in the MSA, the loan officer office, if you will. And then we said, we have the smart board technology. We actually went and engineered smart boards because we noticed that in the average conference room, it's always a hassle getting on a Teams call. So, and
Right.
everybody's always got these glass whiteboards that they're interacting with. So we said, okay, well, let's put a whiteboard, a Teams call, and a TV all in one device and put a PC onto it. We engineered these smart boards, and then we had these things called avatars too. That is a digital avatar that you can talk to on our devices, that you can take a mortgage application or check into an open house. And then we were hanging out one of our summits in Vegas one day, and we said, wouldn't it be interesting if we had one of those mini rooms and the customer could go scan a QR code, get a code, open it up, close the door, the glass smokes, our avatar comes over a screen and says, sit down, let's take your mortgage application. They do all the questions of the mortgage application, and then it calls the loan officer up and says, okay, let me introduce you to your loan officer. So I said, I don't think it would be that hard to engineer that. Let's try it. So we reached out to our hardware manufacturer. We said, hey, we have this crazy idea. We want to combine our smart board, our loan pad technology, our avatar, our point of sale system, and we want to put it all in a box. And we want to call it a loan pod, and we're going to put them in our real estate offices, and it's going to be a private little confidential meeting room that looks really cool. That's something that somebody wants to go to. And that's how it started taking off. And now we got a bunch of loan pods on the street. We have some in some Walmart locations. We have some in some malls. We have some in real estate offices where a consumer, that wants to go and apply for a mortgage or get a rate quote, they can go into this private little area, close the door. It's a soundproof box. They walk in, the avatar comes over the screen and says, hey, take a seat, relax. Let's take your mortgage application. Let's go shop for some rates. They interact with it, and it'll call the loan officer's cell phone and do a little video conference with them to introduce them to a loan officer, and they can get a pre-commitment or a pre-approval in a matter of minutes. So we're really trying to be disruptive and push the edge of that innovation where it can say, hey, where is the roads that nobody's gone down before? Where's those deep blue seas in the industry? Let's try to operate there, right? The days of the other guy's point of sale system are done. It's no longer cool that you can take a web-based mortgage application and generate a pre-approval. We need to put our own spin on it. We need to, really, really push the innovation window and try to go places that nobody's gone before.
Very, very cool. So that's, it touches mostly on the early stages, the application process, the pre-approval process, and so forth. Like, how does this integration that you have created, how does it work with as you go through the loan process and through the approval process?
Sure. Yeah. It comes down to transparency. I actually just got done doing another interview with some real estate agents, and they were saying that what they really want out of a mortgage company is they're tired of loan originators telling them something's done and then them to find out late in the game that it's not. And, I've experienced this time and time again over the past several years that real estate agents have this general concept that the loan officer is just, I don't want to say lie to them, but just going to tell them what they want to hear rather than the truth, because there's this fear that if you actually tell a real estate agent that there are 14 open conditions and there's 3 days before closing, they're going to think you did a bad job, but yet then there's no accountability. So what we tried to do is do something called a single sign-on portal. And, it's been a great success. The same portal that the customer starts their application in, right? The very right when they start their application is the same portal that they close in. Everything throughout the process, from the initial disclosure to the lock disclosure, to the closing disclosure, to the closing package, to even after the closing, getting either your loan service transfer notices, your first payment notices, right? All of those notices are in that same portal. And then even after that, when you want to apply for your next loan, you don't have to start from scratch. You don't start with a new application. You log into your portal. You say, I need a new application. It knows that you've already been a customer of the mortgage lender. It'll pull out the last application out of Encompass and then pre-fill the customer's new application for them. So it takes a 15 to 20 minute process of an initial application. And when they re-app, as we call it, it'll go and look in the system and say, okay, we already have pay stubs on file from you. We already have taxes on file. We already have W-2s on file. We have 2 years of them. 1 year's expired. Instead of needing 2 years W-2s, only give us one, right? And by the way, you can use our integration with Account Check by Informative Research, and you can just pull down those pay stubs automatically. We're trying to take the consumer experience through a singular portal and make it that through our family of products that we have, our integrations with not only the LOS Encompass, but also third parties like Halcyon for automated ID verification, where you can go and use the IRS API and directly pull down IRS tax transcripts in a matter of minutes. You can then use Account Check to pull in your bank statements, your income statements, your pay stub, your W-2s, drop all of that directly into Encompass through the integration, have Candor step in and underwrite that. You know, if this ecosphere of financial technology that all talks together, what it's doing is it's going to create a consumer experience that is easy, that's less clunky, that's full of transparency, that makes it easy for consumers to get their information in, sign their documents. And what that all translates to is two things: the other two customers, the loan officer and the real estate agent. The loan officer that makes this process easy can build better trust with their customers. And the ones that can get the deal to the table easier because the back office and the customer remove the middleman, now can build better relationships with the real estate partners. And we give the real estate partner now the confidence and transparency through their portals to monitor it throughout the whole transaction. So when we talk about these single customer portals, that's what we're talking about. A single source of truth, one place where all parties in the transaction can communicate through. And when you achieve that objective and you're willing to make that change as a loan originator and change your business, the benefits from it are just, it almost can't even be measured when you look at how much better your customer experience is, your real estate experience, and it makes going and getting new business almost that much easier.
Well, no doubt, because one of the challenges or struggles of the many ones when it comes to loan origination is when you ask your clients for documents and how they're going to get them to you. And, I don't have to tell you this, that very oftentimes that will be one of the biggest hurdles, as far as them giving it up, and then how they give it up, and they don't feel comfortable with this, that, or the other, and this is taking too much time, and it's difficult. So if you can automate those processes and make it easier on them, then to your point, it's easier as an originator to go out and draw up new business and not spend all your time trying to chase documents.
Correct. Yeah, we can't be focusing on getting the business we've already gotten as loan officers to the table, because then that stops us from getting new business, right? But in the same respect, it's kind of a catch-22, because if we don't service our current customer base, then we're not going to get more business. And then when we look at our customer base, every consumer is so different. Right? We have some consumers that are very technologically savvy and then can do this whole process themselves. And then you have some traditional consumers, right, that just want to walk into your office and drop the documents off. So what we try to do is we try to give a system that has consumer choice. We tell our customers, hey, pick a path, right? Do you want the digital journey to sync everything? Here's what to expect. You'll be expected to sync your payroll account, and your bank statements. Get your usernames and passwords ready. That's going to be your fast track version. Or you could do your medium version, right? You can take pictures with your phone of your documents and upload your documents right from your computer. By the way, we like to have you on a laptop to do that, not necessarily your cell phone. Right. Or if you want to schedule an appointment and you just want to drop your paperwork off, you can come into any of our offices and do that, right? And by giving the consumers the choice and saying, you can do this one of three ways, what's the best way for you? We've learned that that's the best possible experience.
Right. And, I'd like for you to touch briefly, because I can only imagine what it must have been like to, in this industry, to get these processes through the aspect of compliance in this industry, and integrating all of these things, and someone signing off on these things.
It's interesting. We started this conversation talking about, our resumes and the longevity we've had inside the mortgage industry. And the more and more I think about it, every day I still see something new. Technically I'm head of credit for my mortgage company, and the buck stops with me. I'm the warehouse line signer. So, when I have a top producer complaining about a guideline or how an underwriter interprets it, it goes from that underwriter to that underwriter's team manager, that team manager to the head of underwriting to the head of secondary markets for loan sale. If it gets to my desk, it's definitely a questionable file. So I definitely see the unique ones, but even after 20 years and, tens of thousands of transactions, I still find myself seeing something new almost on a daily or weekly basis. And when that translates to programming and computer systems and financial technology, it's actually interesting because technology is programmed to be logical, right? Very binary. On, off, 1 or 0. It's the core foundation of binary code. You have to program, when you program an algorithm, when you program a decision, it needs a definitive yes or no, which makes it extremely complex for credit scenarios and compliance because there's a lot of gray area and a lot left open to interpretation. So what that means is that programming technology for the mortgage industry is extremely difficult because you have to factor all of these scenarios in. But it's also one of the ways that allows me to code and allows me to fast track my technology is I have the benefit that I have a built-in test bed right at my mortgage company. When we have these complex scenarios and we're trying to code and program for them, we can take them from the developer that's writing the code and hand it to a loan officer in a matter of minutes, and then run these tests against our real-time data at the mortgage company and go say, hey, have we seen these scenarios before? And we can still only get it to about 95, 98% before we do the full release. And then the benefit is before I go take that tech and I go introduce it to the rest of the mortgage industry, we've become very, very aware at my mortgage company of the crazy ideas that Matt and my business partner Joe have that we go and introduce to our salespeople, right? We say, hey, we have this idea. We wrote this technology for it. Let's go test it out. And we get to have the benefit of, one, having a lot of first to market stuff where we get a lot of new stuff, but also then by the time it makes it down to mortgage automation technology customers, the other lenders in the industry, it's already had 1,000 transactions run through it. It's already had a year of business development to work out the kinks. So a lot of times, a lot of the lenders we work with get to see the benefit of that we're not using them as our test dummies. And we throw a lot of code on the floor. We think a lot of stuff's going to work, and it doesn't wind up working for every scenario. So I think that it's that challenge in this industry of writing that software that really interests me and my team, and the complexity of it that we enjoy working through.
Yeah. No, that's awesome. So, I have to ask you to break out your crystal ball here because there's so much going on with the market right now, and especially with interest rates. And there's been so many different predictions that have been wrong. What do you see in store for interest rates, if you wouldn't mind? And, we won't hold you to it, although this will air and everybody will come back to you.
But well, if there's one thing that 2020 taught me was don't make predictions, because I would have been wrong a lot of the time. And I'm also not trying to compete with my boy Barry Habib to try to get the Crystal Ball Award.
I think that really been getting it right either. He's been talking
it's difficult,
about it.
Right?
Yeah, exactly.
Yeah, I think that it was May 12th was that date that came and
Yes.
gone. This is going to be the date. Yeah.
Into the fives.
And he came out about a week before and said, "Hey, we think this is going to change." But it
Right.
kind of shows you what type of market we're in. That we're really in uncharted waters, right? And even myself, I've done my best in the past year and a half to forecast. But if you asked me this time last year in June or July when rates were at 5.5%, 6%, if they were going to continue to go up, I would have said no. I said, no, we went from 3.5 to 5.5 in 6-7 months. That's never happened before. This is where it's going to stabilize. And then it shot up to 7.5 by October. So it's extremely difficult in the current economic times to actually forecast. But inevitably, this has to deal with a couple of different factors the way I look at it. One, we're very close to another election cycle. I believe that we warded off a recession, but we probably should have in some terms declared a recession. But we were trying to say, hey, the economy's better than what we actually think it is. And it may have been so. But we probably should have saw a recession already. We probably should have saw rates come down already. But we're trying to push that off and kick that can down the street. And that's really going to be the deciding factor if rates are going to come down. So if I had to say one thing, I think that we've normalized a bit right now. I don't think that we're going to see rates, 30-year mortgage rates go to 8%. I really don't think we're going to see that. I do think, however, that for the next 6 to 9 months, we're going to see a mid 6 to 7% 30-year mortgage rate. And then depending on how these election cycles go, depending on who we're seeing in the polling is going to be actually running this economy, what Fed chair we're going to have in, right? All these other factors of what's going to happen, and really looking at the energy sectors too. You see administration change, you might see a change in energy. You see a change in energy, manufacturing costs go down, supply line costs go down. We might be able to see a little bit of a dip to stir that economy up and see a dip in rates. So please don't hold me to this, but I'm going to say that second quarter 2024, 5.5% 30-year fixed.
Okay. I'm going to hold you to it. No, I think
you just said you weren't going to hold me to it, but my best guess would be yes, second quarter. A lot of people were saying right now, right? They're saying midsummer was the predictions. You look at first quarter 23, they're saying midsummer 2023 is you're at 5.5, 5.25%. So I'm giving it a 9-month extension.
I like it. So as we start to wrap things up here, Matt, so you got any big projects on the horizon?
Oh, we always have big projects in the works over
I know. I figured as much. That's why I wanted to hear about it.
We are always innovating. I can't disclose all of it, right?
I figured.
But there's going to be some interesting marketing campaigns you're going to see drop over the next couple of months. You're going to see a lot of the fintech start to explode. People are looking for change. And the more more companies that start to adopt the technology that we're putting on the street, you're going to see more of that disruptive approach. You're going to see more automation, outsourcing, more technology that's introduced into the loan officers' worlds that's going to start changing the tempo. We're talking about this new initiative at CHLA that I've taken up called the Digital Mortgage Initiative. And it's something that I'm advocating for. It's a policy that I've been behind. I've been at FHFA trying to pitch it. And what its entire basis is that when we sell loans to Fannie and Freddie right now, we're selling PDF-based mortgage stacks, a Misimo stack of a tape of mortgage-backed securities that are all compromised of PDF documents, and they get pulled for QC and pulled for review. I'm leading the effort right now through CHLA to specialize in what's called the Digital Mortgage Initiative, where I'm trying to get the GSEs, trying to get Fannie and Freddie to understand that there's actual data behind the paper. That if day one certainty systems, the verification of asset, the verification of income, the stuff through account check, the stuff through Halcyon, these PDFs are also delivered with something called an XML file. It has the raw data behind the PDF. And that if the GSEs through the AUS systems, through DU and LP, can actually digest these XML files, that we can start delivering full mortgages that are data-based mortgage packages. That I can deliver a tape of 500 loans in a mortgage-backed security. And when I sell it to the window, if they digest the XMLs rather than the PDFs, they will be able to do 100% QC. It'll fix a lot of problems. And also, in doing so, they should give a benefit back down to the consumer. Give a reverse LLPA. You want more consumers to use digital-based mortgage processes? Well, here's the solution to it. Give them a 25 basis point pickup in their rate and say you have two choices. Give us your paper and it's this rate, or get an eighth or a quarter better on your interest rate if you go through the digital process and sync your bank statements and sync your income and assets. You get a pickup in rate, or you get a pickup in closing fees. Watch the usage of these systems skyrocket if that's done. And then watch these issues in post-close consummation QC go away, because upfront at closing, when the underwriter runs their final AUSs, we're going to be uploading those XML files for the verification of income, verification of asset, verification of employment. If we can do that, the AUS engines can be intelligent enough to then pick up on issues before closing. So it's better for lenders because we have better protections. We're going to have better rep and warrants. We're going to have better AUS screening, which is going to make us be able to take on riskier transactions, more willing to lend to low to moderate income, more willing to lend to underserved consumers, less risk for IMBs in post-closing because less buybacks, better QC processes for the GSEs, more robotics, more AI can go in and screen this stuff. It sounds like too good to be true. And really, that's why I'm advocating for it, that stop buying paper-based mortgages. Right now, what that's going to lead to is you don't need a tax return to sell a loan, right? You have a direct IRS XML file right from the source of truth. You don't need a bank statement because you have the XML file right from the bank, right? That's the future. So that is what I think you're going to see coming down the pike by 2030 is a true digital-based mortgage, not just a PDF stack.
Yeah, I can totally see that happening. And I'm looking forward to seeing these things come to fruition and the projects that you have coming up. I'm sure there's a lot more than what you can touch on today. And I'm excited to see it, man. I really am.
I'm excited to see it too. And I'm excited to be, just another cog in the wheel of trying to make all this stuff happen. So, and I appreciate you sharing that passion about it, right? It's hard to geek out about mortgages with the average person. So.
It really is. It really is. Sometimes I feel like I'm the only one in the room. So I've enjoyed this as well, Matt, like big time. So I'd like to say a special thanks to the Mortgage Reports for making this episode possible. A thank you to all of our listeners. And wherever you watch or listen to your podcast, if you found today's episode helpful, please rate and review and share it with others, especially if you know someone who this could apply to or for. And there's a lot of good information here that I'm sure that people can do so with. Matt, so very insightful, very innovative. It's been a pleasure. What's the best way for people to contact you?
Yeah, I try to be as accessible as possible. You can reach out to me on LinkedIn if you'd like. All of my information is on there. You can also reach out to me at thebigpointofsale.com. So if you go to thebigpos.com, that's our point of sale site, or mortgageautomationtechnologies.com. Any of the questionnaires you fill out there will definitely get routed over to me. But right now, the best way, if you want to reach out, is just visit my profile on LinkedIn.
Awesome. Matt Van Fossen, I really appreciate you taking some time out of your day today. You're a busy man. You got your hands in a lot of different things, but I really appreciate you coming on the show, and I look forward to seeing what is coming next for you.
Thanks, Craig. I appreciate you having me.
You got it, man.